And we have the best of market men, you can say. Raamdeo Agrawal, Joint Managing Director, Motilal Oswal is with us. Raamdeo, busy day, and I'll relieve you quickly enough for you to even walk back to your office. But tell us, do you think at the end of today, or at the end of this week, or even end of the contract, this market is more likely to be at 8,500 or 8,000, or is it more likely to be 7,000? In short, will Jaitley give some kind of a dream budget?
Yes, I think stage is set for that, and this is the most opportune time for him to deliver that so-called dream budget. If you see his railway budget, if you see the economic survey, if economic survey is honest and it's to be translated into the budgetary proposals, in that case it looks that first time they are talking something which is very encouraging, in the sense that one of the thought which I saw was that permitted, everything permitted unless it is prohibited, expressly. So that theme should run across, because how do you debottleneck this economy? I mean, it's a huge economy. There are huge opportunity domestically, externally, in finance, non-finance, everywhere. And yet everything is clogged in terms of government regulation. So government has all the power to say yes and all the power to say no. But they have been relying 90% no and 10% yes. Can you tilt that to 90% yes and 10% no?
Yes, so, until specifically no.
Yeah, so I think that's the power they should use it. At least they should start from this budget, and later on, there is no. Today is not the day to give yes to everything. But I think that if you see the roadmap, that yes, citizens are empowered to take on to economic activity, and then make the life of businessmen very easy. Because I mean, you have to actually become like, for a company, consumer centricity or customer centricity is the thing. I think we should become business centric or citizen centric country, so that you take care of the citizens' problem. And businessmen are also domestic citizens and very empowered citizens. So how do you take care of them instead of having complete distrust? If the government has distrust on the business will have full distrust on government. So this relationship doesn't work.
Sure. Right, the point is taken. But sorry, but the market has to be prepared for all eventualities. What could disappoint the market, and in that case, what could be the flow for this market if there's big disappointment?
Yeah. So. I mean, it is very difficult to say what will disappoint the market, but see, if you don't have enough resource mobilization for growth, I mean, see, growth is one thing which market loves, and how this growth will be powered up. I mean, where is the resource mobilization, whether even fiscally whatever is required, consolidation or is there or not, whether enough reforms have taken place or not. So I think it is all about in toto whether people are getting the sense that yes, we are going to go to 6, 7, 8, 9, 10, that kind of roadmap should be there. They said in economic survey that next year you should expect about 5.5 to 6%. Yes. And it's like saying 272 plus for the election. What you get is 342 if you do a good job. So today it is only setting the goal, but rest of the year they have to execute. And when you execute well, you definitely get better than what you have targeted.
All right. So let's use some football parlance, like you were mentioning earlier. Do you think Jaitley could do a Germany-Brazil with a 7-1, or do you think it will just be a sort of a game that will go into penalties?
No. I think this is a perfect opportunity for Arun Jaitley to score 7-1 like Germany and straight go into the final, which is going to be the next budget.
So what's the upside for the market if that happens?
So I think market has run up quite a bit, and so typically what happens is, the way I kind of keep talking about the short term, is the buy on rumor, sell on news. So today is the day of the news, big news, and that's why I think even the railway budget was a little spooky in terms of markets. So I think there could be a very shallow short correction that could also be a possibility. Or if something which is completely unexpected comes, which I don't know what, because a general budget can be a big policy announcement kind of thing. He can pull out something which market may like, and that can take the market by 700 points, which has come down between yesterday and today. I think that can come back.
Okay. And if that happens, I mean, you get a correction.
Yeah.
What will you buy?
I think you see, as far as buying is concerned, whether there is no correction or no correction, you have to go and buy, because this is a 5-year mandate, and this is one of the best opportunity in the market in recent times. In my 25 years of career, this is the second best opportunity I have seen. One was the Y2K in 96, 97, when you could see in 4 years mandate, I mean, the Y2K is coming like this. Modi Sahab has got 5-year mandate. First mandate is 5 years. Then he has to prove and then get to the second one. So in this 5 years, he has to deliver 8, 9, 10% kind of a GDP growth. So this kind of dated growth structure you rarely get.
No, you said I will never buy public sector. So what will you buy?
Yeah, so there are a whole lot of good, well-managed, monopolistic, consumer-centric, profitable companies. Companies which have a good business model, who have scalability, who have say like Maruti. Now, if you see the first company which has been kind of fired up by Modi effect, large company, is car demand. Least expected, but the actual demand came in the car side. And that company has 45% market share, extremely well run, and very consumer centric, and very frugal in terms of customer cost. So I think those are the companies, they will do very big thing, and they would not know how big the bounty would be if the economy grows at about 10%.
What about in cap goods and infrastructure? Because L&T is the biggest gainer since the start of the year. Is that a stock that you would still bet on, or are there other ideas within that space that you like?
L&T definitely is going to be the leader, because they are, 1 to 10 in complicated capex cycle. They are there. So clearly, it's very good. And but there will be birth of lot of mini L&Ts. I wish there was 5, 6 more L&Ts, but the smaller size, and they will come up, and that's where the opportunity is going to be very large.
Raamdeo, we let you go. You can even walk to your office, so we have kept your word.
Thank you
very much for coming by.
Thank you very much.
Okay, from one market veteran to another, Samir Arora, founder and fund manager, Helios Capital, is joining us now. Thanks a lot, Samir. What's the gut just before we get into the budget? Raamdeo here was saying that this is going to be a Germany versus Brazil kind of score, a Germany score that you will get from Jaitley, that he is going to score something resetting in this budget. You agree with that? You think that this could be one of those magical dream budget, Chidambaram 97 kind of stuff?
No, I don't think that, but I think it's easier. It's a German-Brazil, but with a much weaker opposition, which is the cynicism of the Indian investor. I think the bar has been set so low now, particularly in the last 2 days, where commentators are saying that we want a good, credible roadmap and some evidence that things are progressing. Well, Mr. Modi just won an incredible victory on the same basis, that he laid down an incredible roadmap, and he has the second most articulate guy after himself presenting the budget today. So to suddenly say, oh, will they present that? Obviously they will. And I don't think the last 2 days' fall has anything to do with the railway budget. It has to do with the fact that Indian investors have bought complete crap on the futures exchange, and foreigners have bought even bigger crap in QIPs. So it has nothing to do with the budget per se. I think you've set the ground so well that I think it's an incredibly good time for the markets.
Okay, Raamdeo here is actually nodding in appreciation to what you said. But Raamdeo, you think that one should completely stay away from all these leverage plays, the PSU plays, and just look for good quality companies now?
Yeah, that's what I have been doing that, and I have seen that 90% of the problem comes from the very bad qualities coming into your portfolios. So neither I have time for them, nor they have time, because what happens is in quality companies, downs are temporary, ups are permanent. In bad companies, downs are permanent, ups are temporary. So you decide what you want.
Fair point. Well, Samir, in this budget, what exactly would you want to hear to call it a resetting budget, or to give it an A+, where you would definitely come in and buy at the dips?
I think mostly I'm going to buy it, and mostly I've bought already. But just let me give you, before that, 1 or 2 points on which I think the market participants as always are confused. Number one is, oh, will we get a 4.1% fiscal deficit with Mr. Chidambaram so kindly set for the next government? Have you ever had a management which has been asked to leave be asked to set the goals for the next management? Or a fund manager who's been fired to be told that you please tell the world what will be the returns that the next fund manager has to make and what is the minimum he should make. So to have this number of 4.1 just more than an anchoring. Second is, oh, 4.5 would be too high. Well, last year we had 4.5, and from that day everybody would have wanted to buy stocks to get this return this year. The point is that look at the change. The change is big even in the railway budget. Do you really believe that India needs a bullet train? Or do we need a cleaner train, safer train, less accidents, more food available at the platform, packed food in the train. Those are the things we need. And to suddenly say, oh, they did not commit to this, they did not commit to that, they put only 100 crores in this, is just because we are constantly seeking headlines, and this is a new management, which is more bottom-up. Now, in terms of your question, I've completely forgotten, so please ask again. What was your question?
No. What is the big thing you want to hear in the budget that will give it an A+ and make you go and buy?
Yeah. So two things here. That 4.1 will be an artificial number, so let's take it to 4.3, 4.4. And now there are 5 or 6 big themes on which we should obviously comment on all, and on two, give a little bit more specific. Let's say, what are these 5, 6? One, everybody knows GST roadmap. Second is something to do with this retrospective taxes, and maybe say, okay, Vodafone, we can't do much because politically this thing, but beyond that it's over or something like that. Third is a bit on subsidies, where maybe the food subsidy is too complicated right now, but at least on oil and gas, you don't have to start tomorrow. But if you announce today that it will be done from October, that LPG cylinder price will go up 5 rupees per month or something, so that today you can't protest because it's actually in October, and in October you can't protest because it was announced in July, and why didn't you protest then? So that kind of a thing is what we need. A fourth one obviously is to do with infrastructure investments and how you're going to finance or assist a PPP. Point is, he obviously has to comment on all and give his vision, but in pure delivery, I don't think he has to say today exactly what will happen in each of them. He has to give a path. But to have the senior counsel of a Supreme Court, who was the first or top or third or fourth biggest lawyer in India, not being able to argue his case today would be disappointing. Therefore, I think it is too easy this time. It's too easy. It's all going to be done as we all want.
Samir, a very quick question, and coming to specifics again. When I last spoke to you, you said the government should sell Suti's stake in ITC and then raise excise on cigarettes. Did you say it in jest, or did you really mean it?
No, the thing is, on Suti, I believe that today, if they were to say that divestment target is X, they should separately say what is the Suti target. Because for me, a Suti target is an intent of reform and the fact of India leaving or giving up on its private equity stakes, which have not strategic in nature, where there's no union, you got them by default. So those should be more psychologically easier to sell. On divestments, if you can't have a very big number today because you are still not reformed the ONGCs or the Coal Indias. So if you have a very big privatization number, a divestment number, which comes more from PSU stocks rather than Suti stocks, in a sense it becomes more difficult to achieve it. Or you can say that therefore before that they will have to reform these PSUs, which I don't know how you can do that in a 1 or 2 month period or 4 month period, before which you'll have to start selling them. Therefore Suti should be done. Now tax on cigarette, that was more of a thing that you can do it after you sold it too bad. So that's a different angle.
Okay, no, actually I was more stuck on the previous answers that you gave, the 4 or 5 things you will watch, and since we have Rhythm Desai with us, quickly let me ask Rhythm to add to that list. Managing Director Morgan Stanley, obviously. Rhythm, what are the top things that you will be watching out for?
I'll be watching out for 2 very important things. One is, what does the government do with the fiscal debt, with the subsidy spending? The subsidy spending is very elevated versus history, and that is in part fueling India's inflation. So what exactly does the government do? I'm expecting it to cut that subsidy spending by, say, around 50 basis points to GDP. The second thing is what the government does with the rural employment scheme. I'm expecting some curtailment in that program and greater focus in generating productive assets or some output relating to Narega, so greater focus on what output Narega generates. And then you take that money that you save on this side of the expenditure into investment spending. So basically what the government does with infrastructure spending. So that is one aspect of the budget. The second is, I'm looking for better use of government's balance sheet. So look for a big divestment program, something like $15–16 billion, which you can then use to boost infra spending. I'm not a big fan of government spending, but I think at this stage of the economy where we are, it's unlikely that the private sector steps in a big way. So the government will have to pump prime. Very different from what it has done in the past. Most pump priming exercises of the government in India have been consumption oriented. This time I would expect that it's investment oriented. So if you do this 2 together, you can boost infrastructure or investment spending by about 150 basis points to GDP. which can contribute around 30-40 basis points to GDP growth in the next 12 months. And curtailing the subsidy and Narega program will bring down the inflation pressures, helping the RBI, which is keeping real rates positive. So it brings down inflation and boosts growth, which is exactly what the Indian stock market needs for continuing rise in share prices.
All right. Gentlemen, stay on with us. We are also being joined in a minute by Ratnesh Kumar, Managing Director of Standard Chartered Securities.